Gucci, Louis Vuitton, Chanel. These names once screamed wealth, status, and exclusivity, symbols of a life most people could only dream of. For decades, luxury brands ruled the world, raking in billions while selling the idea of perfection. But in 2025, something shocking is happening. These giants are crumbling. Stores are closing. Sales are plummeting. And some of the biggest names in luxury are on the brink of going broke. So what's going on? How did the untouchable kings of fashion fall so far? In this video, we're diving deep into the rise and fall of luxury brands, exposing the hidden truths behind their collapse and revealing what it means for the future of luxury and for you. Let's get started. Luxury brands weren't always the global powerhouses we know today. Their story begins over a century ago with small ateliers crafting exclusive goods for the elite. Take Louis Vuitton, founded in 1854 as a trunk maker for French aristocrats. Or Gucci, started in 1921 as a leather goods shop in Florence. These brands built their empires on one key idea: exclusivity. If you owned a Louis Vuitton bag or a Chanel suit, you weren't just buying a product, you were buying a status symbol, a ticket to the upper echelon of society. By the late 20th century, luxury brands exploded. The 1980s and 90s saw a global obsession with wealth. Think Wall Street bankers and Hollywood stars flaunting their Rolexes and Hermes bags. Brands like LVMH and Kering became conglomerates, snapping up smaller houses and turning luxury into a multi-billion-dollar industry. By the 2000s, they were unstoppable. Gucci alone went from near bankruptcy in the 90s to pulling in $10 billion a year by 2015. Luxury wasn't just for the rich anymore, it was aspirational. Middle-class consumers saved up for a single designer bag, believing it would make them feel like they'd made it. And the brands? They mastered the art of selling that dream. But even the mightiest empires face cracks, and for luxury brands, those cracks started showing years ago. Fast forward to 2025, and the luxury sector is in a full-blown crisis. Let's break down the challenges they're facing. First, there's the global economic slowdown. With inflation rising and a looming recession, even the wealthy are tightening their belts. A 2025 report from Bain & Company shows luxury sales dropped by 5% globally, the first decline in over a decade. Kering, the parent company of Gucci, issued a profit warning in March 2025, projecting a 30% drop in earnings. LVMH, the world's largest luxury conglomerate, reported its slowest growth since 2009. When even the rich stop spending, luxury brands feel the heat. Second, there's a cultural shift. Gen Z is rejecting luxury like never before. The No-Buy 2025 movement has taken off, with younger consumers prioritizing sustainability and authenticity over excess. A McKinsey study found that 60% of Gen Z would rather buy second-hand or support ethical brands than splurge on a designer logo. Luxury brands, built on the idea of overconsumption, are struggling to adapt. Gucci's sales in China, a key market, dropped 20% in 2024 alone, as Gen Z turned to local, sustainable designers instead. And then there's market saturation. Luxury brands expanded too fast, flooding the market with products that were supposed to be exclusive. Louis Vuitton opened stores in every major city, but when everyone has an LV bag, is it really special anymore? This overexposure diluted their brand value, making luxury feel ordinary. So, what does this all mean? Luxury brands are falling, and they're falling hard. In 2025, we're seeing the consequences of these challenges play out in real time. Burberry announced the closure of 10% of its global stores after a 22% sales drop in Q1 2025. Prada's stock plummeted 15% as investors lost confidence. Even Hermes, known for its bulletproof Birkin bags, reported slower growth as demand for ultra-expensive items waned. But the fall isn't just financial, it's cultural. Luxury brands are losing their allure. Gen Z doesn't see a $5,000 bag as a status symbol, they see it as a waste. Instead, they're flocking to platforms like The Real and Vestiaire Collective, where secondhand luxury is booming. In 2024, the global secondhand luxury market grew by 12%, while new luxury sales stagnated. Consumers are hunting for deals, and brands are being forced to slash prices to compete, something unthinkable a decade ago. Gucci, for example, held its first ever public sale in 2025, offering up to 40% off, a desperate move to clear inventory, but one that risks cheapening the brand forever. The magic that once surrounded luxury, the idea of exclusivity, of being part of an elite club, is fading. And with it, the empires these brands built are starting to crumble. So, what can we learn from the fall of luxury brands? First, exclusivity isn't enough. Brands can't rely on scarcity or high prices to stay relevant. They need to adapt to changing values. Gen Z wants sustainability, transparency, and purpose. Luxury brands that don't evolve, like Gucci, which has been slow to embrace eco-friendly practices, will keep losing ground. Second, overexpansion is a trap. Growing too fast, as many luxury brands did, leads to oversaturation and a diluted brand identity. Exclusivity only works when it feels genuine, not when there's a Louis Vuitton store on every corner. Finally, consumer loyalty isn't guaranteed. Luxury brands assumed their prestige would keep customers coming back. But in 2025, loyalty is earned through authenticity and value. Brands that can't deliver on those fronts, like Burberry, which has struggled to redefine itself, will continue to fall behind. Luxury brands were once untouchable, but in 2025, they're facing a reckoning. The industry is at a crossroads. Adapt to a new generation of consumers or risk fading into irrelevance. What do you think? Can luxury brands make a comeback, or is this the end of an era? Let me know in the comments. And if you want to dive deeper into the wild world of luxury, check out this video on screen.